The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 now down 46.61, 46.61. 10-year Treasury, basically it's flat this morning. Mortgage-backed securities down 5 basis points, means interest rates are up ever so slightly. And as you know, OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year mortgage, 5.90 is where they locked at yesterday. 30-year jumbo, 5.282. 30-year FHA, 5.684. And the best loan on the market for those who earned it, the VA loan, 5.457. But as you know, all those numbers are easily found on that super secret website. That would be google.com. What's driving all of this? Well, you know there's going to be either we're in a recession or there's one on the horizon. We've talked about that. Chapman University told us that there's one on when their forecast update on last Thursday. So we know it's coming, but, you know, there's a big problem here. According to the Federal Reserve, it's not coming. They don't see one. But I'm not sure a Federal Reserve has ever seen a recession coming, even right before the Great Recession. They were telling everybody, there's not going to be a recession. But, you know, it is the Federal Reserve. So this morning, we've got Fed President John Williams. So he's one of the top 3 guys at the Federal Reserve. Spoke on CNBC and said he expects growth to slow, but does not see a recession. Really. The Fed will never admit this, but the Fed's plans to continue to hike rates and slow down the economy. There's something called the neutral rate. I'm not going to get into the weeds on it. Basically, we need to get the Fed funds discount rate to between 3 and 3.5%, and to see maybe a decline by about 3% in inflation. They're using the core rate. That way it's easier for them to deal with. I just throw that out there. They use core because we don't need to have any food or energy, and being that they can't influence it, that's what they use as core. Housing news, the National Case-Shiller Home Price Index. We've got that one for you if you're watching us on RonSiegelRadio.tv, any of our socials, the ABC News and Talk video feed. We've got the Case-Shiller Home Price Index. It's showing for the month of April. Case-Shiller does good stuff looking backwards. They're not always the most current because they're always a little bit delayed. Previous month, 2.1% appreciation. Previous year, the year-over-year number is up 20.4%. Top cities monthly is Miami. Annually, Tampa. I guess Florida is a good place to be. FHFA, I like this one better because it measures, it doesn't have as much skewing to higher priced properties. So FHFA came out 1.6 month over month, 18.8 year over year. And on the West Coast, we're still running real high. 1.4 on the West Coast, 18.9 year over year. All these reports are basically saying what we've been telling you right along, is that property, the real estate is still growing dramatically. It's going to slow down. Remember, Chapman told us that it's going to drop by 12%. Some places don't see that, but that's what we're looking at right now. I don't know. We do need to slow down. Remember that housing prices go up during a recession, but they do tend to lag, is what happens. They tend to lag a bit in to the interest rates. So usually about the middle part of a recession is when we see that's when we're actually going to see the house prices drop off. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.